In an effort to address concerns regarding its financial strength, Credit Suisse announced plans to raise capital through the sale of convertible bonds, more divestitures, and other cost-saving programs. Yahoo reported earnings last night that were better than analyst estimates, but profits still declined 4% from last year. I'm Taylor Schranz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with The Street, and together we bring you the Morning Call Express. This morning, stock futures seem to be pointing to a flat to slightly down open. All focus will probably be on Ben Bernanke, again, as he goes from the Senate yesterday to the Hill today. What should we expect with him?
I think we got everything that he was going to say yesterday. It's just going to be, I would say, spoken about differently on the Hill. You can have all these congressmen trying to make headlines, kind of like what Schumer did yesterday, saying, you guys got to do everything you could do in order to ensure a strong recovery, which at this point they've done a hell of a lot. And yes, our stock markets are acting okay, and there seems to be a bit in the overall markets, but commodity price has been high. The job market hasn't really recovered the way everyone would like. And P.S. yesterday he didn't announce a new QE program. At first the market sold off, but then we regrouped and pretty much closing the highs.
Yeah, which was an interesting reaction there. But so how about we take a look at the SPX and see where it goes today? A lot of traders yesterday got beat up, me being one of them, because it did seem like the market wanted a when, not an if. And then after all those headlines hit saying that they weren't going to do any new programs, but they will act if they have to act, pointing to, everyone like the little bulge in the pocket metaphor. Anyway, that's, I guess, all the market needed for now. But it's going to need more than that coming up soon as we go to bigger levels on the charts. If you look here at the chart of the spiders, you will see, ever since that low in May, we've been following this nice ascending channel. You have your low, higher low, higher low. So, as this has stayed intact, it's been a pretty good roadmap to trade against. But what we're coming up to very soon is this downtrend that's also controlled the market since the high coming in late March. So when you have an intermediate trend meeting another intermediate trend, you get some type of action area here. So I would think within the next week or so, it's going to be very interesting to see if this market could take out 137.50 and break this trend of high, lower high, lower high, and that would cause a pretty big squeeze. If not, and we fail there, then obviously we have this intermediate uptrend to trade against. So I do think right now, we're looking more micro versus macro. Europe has been not quiet, but ever since the summit, everyone's not obsessing over it. So right now we're looking at earnings, and that's really what's dictating the tape right now. It really is. We saw Goldman Sachs come out with earnings yesterday, and that stock really didn't get much traction during the day, kind of like JP Morgan. When they came out, the stock popped, but then since then it's given back. It just shows you that you don't have to be in any rush to buy the banks into excitement. Wells Fargo is best in breed. JP Morgan, I think you could buy a little bit on weakness. You look at the chart of Goldman yesterday, it actually was a better short than long. It tried to break above this 99 area that we talked about, couldn't hold above it. So at this point, I just think it's rain bound, and I think actually at some point it's going to retest this 90 area. So this is your macro level. So right now it's pretty noisy. I would just avoid Goldman Sachs. Intel came out last night with earnings actually, and it was kind of disappointing because they lowered guidance on sales for the full year, but down at 25. Is it buyable? Do you think it was enough? I think that's what everyone's going to be looking at, because it was 29, now it's down to 25. They've already discounted the semis so much, so the question is, was it enough? So no one knows yet, so you have to watch the levels and look at the action. If you look here at Intel, you'll see that you have support here. Okay, support coming in now at about 24.84. So if you want to be long and you don't have commitment to this, trade versus 24.70. If Intel starts to break below this support here, you're going to see some pressure on tech. If it holds it, perhaps this move from about 29 down to 25 and change was enough. Yahoo also reported earnings last night. Earnings beat estimates, but profit was still down 4% for the year. So is this stock ever going to get out of that $15 range? You know what? At this point, we don't know. But if we see big volume above 16, that's when you go for it. You look at the chart right here. I don't think this earnings report was enough. You have a huge channel going across. I will not touch a stock until it gets above 16.20 with volume, and it'll probably end up, unfortunately, being some kind of takeover rumor. Let's hope that they do sell the company. I think that's the only way it gets back above 20 bucks. Probably. Well, we're going to cover all this and more in the long-form version, so stay tuned for that.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. With T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.